Welcome back to the channel, everyone. Today, we're diving into one of the biggest shifts in modern finance. The transition from physical to digital banking. Think back just a couple of decades. If you wanted to check your account balance, you had to drive to your local branch, stand in line, and ask a teller. If you wanted to deposit a check, you needed to physically hand it over, fill out a slip, and wait. And if you wanted to transfer money, you'd often need multiple signatures, paperwork, and a lot of patience. Fast forward to today. Almost all of those actions can be completed in seconds on your phone. Mobile deposits, instant transfers, bill payments, budgeting tools, even investment services, all right in your pocket. But with convenience comes new challenges, security concerns, accessibility issues, and the need to understand a rapidly changing financial ecosystem. So, in this video, we'll explore why the world is moving from physical banking to digital banking, what it means for everyday people, what banks are doing to adapt, and how you can safely and effectively navigate this transition. Stick around until the end, because I'll also share tips to make digital banking work for you while avoiding the common pitfalls. Let's start with a quick history lesson. Banking has always been about trust, security, and access to money. For centuries, people stored wealth in physical banks, grand buildings made of stone, often located at the center of town. This was intentional. Banks were meant to feel safe, reliable, and permanent. The 20th century gave rise to checking accounts, credit cards, and ATMs. These innovations slowly moved people away from relying only on face-to-face interactions. By the 1990s, online banking emerged, allowing customers to log in through desktop computers. It was revolutionary at the time, even though early systems were slow, clunky, and limited. The real game changer came with the rise of smartphones. Mobile banking apps made it possible to manage money anywhere, anytime. Suddenly, you didn't need to live near a branch or wait for bank hours. Money became digital first. Now, entire banks exist without a single physical location. Known as neobanks or digital banks, these institutions operate solely online, offering everything from savings accounts to investment portfolios at lower costs than traditional banks. This evolution represents more than just technology. It's a cultural shift. People now expect instant access, seamless experiences, and personalized financial tools. The old model of waiting in line at a teller window feels outdated in a world where a ride, a meal, or even a date is just a swipe away. So why are banks investing so heavily in digital transformation? 1. Cost efficiency. Maintaining physical branches is expensive. Buildings, staff, utilities, and security all add up. By moving services online, banks can reduce overhead and pass some savings to customers in the form of lower fees or higher interest rates. 2. Customer expectations. Today's consumers want convenience and speed. If a bank doesn't offer mobile check deposits, instant transfers, or 24/7 support, customers are likely to switch to one that does. 3. Competition from fintech startups, think PayPal, Venmo, Cash App, and digital-only banks like Chime or Monzo, are redefining what banking looks like. Traditional banks must adapt or risk becoming irrelevant. 4. Global connectivity. Digital banking enables cross-border transactions and easier access to international markets. This is essential in a global economy where businesses and individuals often operate across multiple countries. 5. Data insights. Digital platforms allow banks to collect valuable data. They can analyze spending patterns, predict customer needs, and offer personalized products, something much harder to achieve in a physical setting. But here's the key takeaway. Digital banking is not just about banks saving money, it's about meeting people where they are. And today, people are online. Still, this raises a big question. If digital is the future, what happens to physical branches? The answer might surprise you. You might think physical branches are becoming extinct. And yes, many banks have closed locations, especially in urban areas where digital adoption is highest. But physical branches still serve important roles. For one, not everyone is comfortable with technology. Older generations, rural communities, and people without reliable internet access still rely on in-person banking. Physical locations also provide services that are difficult to fully digitize, such as complex loan negotiations, financial consultations, and large cash transactions. Instead of disappearing entirely, branches are evolving. Many are transforming into digital support centers, where staff help customers navigate apps and online tools. Others focus on high-value services like mortgages, business loans, and investment advice, rather than routine deposits or withdrawals. So while the number of branches may decline, they'll likely still exist, but with a different purpose. They'll be less about everyday banking and more about specialized, human-driven interactions. Let's break down why millions of people are making the switch. 1. Convenience. With digital banking, you can check balances, pay bills, or send money instantly, anytime, anywhere. No more waiting for business hours. 2. Speed. Transactions that used to take days, like transfers or check deposits, can now clear within hours or even seconds. 3. Cost savings. Digital banks often have lower fees and higher interest rates because they don't carry the expenses of physical branches. 4. Better tools. Many apps now include budgeting features, spending trackers, and savings goals. Some even offer AI-driven financial advice. 5. Global access. If you travel or work internationally, digital banking makes it easy to access funds, convert currencies, or send money abroad without steep fees. 6. Eco-friendly. Less paper, fewer commutes to branches, and digital receipts all reduce the environmental footprint. 7. Inclusivity. Surprisingly, digital banking can also increase financial inclusion. People in underserved regions can now access financial services through mobile phones, even if there isn't a bank nearby. But it's not all sunshine and rainbows. With new opportunities come new risks. As powerful as digital banking is, it comes with real concerns. 1. Cybersecurity threats. Hackers, phishing scams, and malware are constant threats. A single data breach can compromise thousands of accounts. 2. Loss of human connection. Some people value the personal touch of walking into a branch and speaking with a trusted advisor. Digital systems can feel impersonal. 3. Accessibility issues. Not everyone has access to reliable internet or smartphones. Digital banking risks leaving behind the unbanked or underbanked. 4. Technical glitches. App crashes, server downtime, or network outages can lock you out of your money, even if just temporarily. 5. Over-reliance on technology. What happens if your phone gets stolen, your password is hacked, or you forget your login? The reliance on digital systems can be both a strength and a weakness. 6. Data privacy concerns. With more data being collected, customers need to trust that banks are handling it responsibly and not selling or misusing it. In short, digital banking is powerful, but it demands caution. Which brings us to our next section: how to protect yourself and thrive in this new financial world. If you're moving from physical banking to digital, here's how to do it safely and effectively. Start small. Begin with simple tasks like checking balances or paying bills before fully transitioning. Use strong security. Enable two-factor authentication. Create unique passwords and never share login details. Update your devices. Keep your phone and apps updated to patch security vulnerabilities. Learn the tools. Explore your bank's app features. Budgeting, savings goals, spending alerts, and investment tools. Keep a backup. Maintain a small relationship with a local branch, or keep some cash for emergencies. Be alert for scams. Watch out for suspicious emails, texts, or calls pretending to be your bank. Educate yourself. Take advantage of tutorials, customer support, or financial literacy resources your bank offers. Diversify accounts. Consider keeping accounts at both a traditional and digital-only bank to balance convenience and security. Review statements regularly. Even with digital alerts, make it a habit to check monthly statements for errors. Embrace change. Recognize that banking is evolving and the best way to benefit is to adapt while staying cautious. So where is all this heading? The future of digital banking will likely include AI-powered financial assistance, blockchain-based security, biometric logins like facial recognition, and even integration with smart devices. Imagine your fridge paying for groceries automatically, or your car making its own loan payments. Banks are also experimenting with personalized financial ecosystems, where your app doesn't just hold your money but helps you invest, save, and spend wisely. At the same time, expect tighter regulations to protect consumers, stronger cybersecurity measures, and ongoing debates about data privacy. One thing is clear: the shift from physical to digital banking is not a trend, it's a permanent transformation. So, what do you think? Are you excited about the possibilities of digital banking, or do you still prefer the personal touch of a traditional branch? Either way, the future is unfolding fast, and the best strategy is to stay informed, stay secure, and take advantage of the tools available. If you found this video helpful, hit that like button, subscribe for more financial insights, and share this with a friend who's still stuck in the old ways of banking. Thanks for watching. And remember, the future of money isn't in a vault, it's in your pocket.